Well, as markets weigh the latest U.S. tariff news, let's take a look at some of the big tech names and get his views on the markets more generally with Mark Sebastian, founder of Option Pit and Chief Investment Officer at Karman Capital. Mark, thanks a lot for joining us. I've spoken to several market experts today, and I've asked all of them what they think of stock markets at record high levels at a time when the tariff uncertainty continues to churn. The announcements continue to come from the White House, and markets have to continue to grapple with the question of what will the global economy look like 6 months or 12 months from now?
Yeah, every time we get these deadlines, it seems to be kind of getting kicked down the curb. Deals continue to kind of be hinted at and work through. So far here, at least in the United States, we've not seen any major effects of the tariffs and any kind of retraction out of the economy. They just passed a big stimulus bill here over the weekend. So there's a lot of balls up in the air. But right now, the S&P 500, the Q, every market seems to be kind of looking past this noise and concentrating more on artificial intelligence, the growth there, growth in the energy requirements, if you will, the picks and shovels of the backbone of that future AI seems to be catching on as well. And the stocks that are underperforming are those that are not really, especially in the tech space, those that are not really leading in AI are being left behind, and we're seeing it pretty clearly across even major stocks.
Do you take that approach as well as a professional investor when you make portfolio choices on behalf of clients? Do you assume that a year from now this tariff situation will calm down?
So let me be clear. I don't have clients. I trade my own money.
Okay.
But what I will say is that absolutely, I'm looking at a name like Apple. Apple had their head of AI development, AI logic poached by Meta. How do they let something like that happen unless they wanted to? Why are they so far behind everyone else? Apple in the next year needs to either purchase somebody that is way up in AI, or they need to maybe stop some of these financial tricks that they're using, stock buybacks, boosting dividends, and actually go back into investing into some of the innovation and jump ahead here, because year over year, the triple Q, which Apple is the second largest component, maybe the third, sometimes the first, it's up now year over year 11%. Apple is down 7.7%. You want to go out 2 years. Over the last 2 years, Apple's up 11.5%. The triple Q is up 51%. 11.5% in 2 years. That is about the return of owning a U.S. Treasury now. That's like the dividend yield on a utility. And so if you want to own Apple and for the long term, if they make no changes, you're basically buying in a utility. If we see them if they purchase a major AI innovator, or they really change their strategy, and I hate the idea that Siri is outsourced to ChatGPT, that Siri is outsourced to Cognizant or one of these other AI vendors that they don't own. I think the most valuable part of AI happens to be in the IP. So I'd like to see Apple really invest in there. Until they do, I think you're looking at, again, utility company-like returns. You're going to get dividends. It'll move up slowly with the market. But on the downside, I mean, I'm using Apple as actually my hedging vehicle when I want to go long the market, because it's participating on the downside and not on the up. Now, one of the names that I think has been punished and actually could be a winner out of this is doing the exact opposite, right? So Apple's sitting on the utility of the phone and Siri and saying that we'll be fine. Google could be doing that with their search, and they're not. I've got my canary in the coal mine here, if you will, was my 15-year-old son asking to get a bunch of the Google tools so he could start playing around in YouTube, because they built a moat around YouTube. They're not sitting on their hands while search disappears. with their, when you look at Google, it's had a rough, it's had a rough go the last year, about the same performance as Apple. But over the last couple of years, it looks a little bit better. So I think there's some real opportunity there.
Okay, let's jump in, and we've got 60 seconds left. You've always liked Reddit. You still like Reddit. You think this could be the next big growth story in tech. We've got about 60 seconds left.
I mean, Meta laid out their entire roadmap for them. They have it's a different format that they run relative to like a Facebook, but it's the exact same game plan. So if they can effectively run the Meta game plan, the Facebook game plan, Reddit is a $100 billion company, maybe 200 billion. This is one I buy 100, 200 shares, sock it away, and look at it in a couple of years, and I'm going to be very happy I did that.